My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people make friends. I'm just trying to make a little bit of money. My job is not just to entertain, but to explain and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. What a sedate end to an exciting week. Dow inching up 62 points today. S&P advancing 0.03%. Nasdaq dipping 0.28%. Let's face it, though. Today may have been placid, but we experienced a phenomenon this week. A company recently unknown to many others than show watchers like you, NVIDIA, not only trounced the estimates, it electrified the entire stock market. I have to tell you, I've never, ever seen in my life anything like this rise in the history of the market. Even as I said endlessly, own NVIDIA, do not trade it. What a dream come true. Why did we get so excited about this chip maker? I mean, that's all it is, really, in the end? No. See, there was an oddly and justifiably biblical quality to NVIDIA's ascent. It was biblical. See, the few other companies with trillionaire market capitalizations, they're all well known, right? Apple, Microsoft, Google, Amazon, Meta. See, they're the Goliaths of this market. NVIDIA's rise felt like David with his slingshot. The slingshot of artificial intelligence propelling this stock to the $2 trillion mark. Sure, the numbers were incredible. NVIDIA's reported bigger upside surprises before without generating this kind of pin action for the entire market. This time, though, management made it clear that the AI revolution is just getting started. Normally, when a semiconductor company reports a huge number like this, here's what happens. You get a ton of hand-wringing about how we must be at the top because the numbers are unsustainable. Didn't happen to NVIDIA this time. That conference call made people realize this story may still be maybe in its early innings, as CEO Jensen Huang has a multi-year plan to dominate the industry with the best graphics cards. They're really semis, I don't know, I like to call them graphics cards in the world. We don't see this often in the stock market. See, there's genuine wonderment here. That's the word, wonderment. If NVIDIA's right, then there's a lot of positive changes coming as the whole multi-trillion-dollar tech orb gets a high-speed GPU makeover. NVIDIA's cards are 20 times faster than traditional CPUs. They generate far less heat, meaning these things are a great investment if you run a data center. The return on investment is spectacular. It's almost impossible to make too much of NVIDIA's ascent, but other sectors rock too, notably housing, retail, and banks. It was a very positive week. But can it continue? I mean, come on. That's the only question, right, that matters, because Wall Street's a what have you done for me lately kind of place. So let's just go to the game plan. Take a look at next week. All right, but long before Jensen Huang, there was another legendary wealth creator. His name was Warren Buffett. His storied company, Berkshire Hathaway, reports this weekend, and we'll be parsing over it, trying to guess what he'll buy, which, by the way, is a totally futile endeavor, but it never gets old. On Monday, we hear from Domino's Pizza. Now, ever since Russell Weiner became CEO, Russell has just, I think he's brought a sense of magic back to the king of pizza. And you know what? I think he's reclaimed the title. It's going to be one of the greatest performers in the biz if he does. It wouldn't surprise me one bit if the market laps up this quarter, because Russell's a really good operator. After the close, Workday reports. Now, how about this one? This software as a service company for human capital management and finance is quietly broken out of the pack. It now stands solidly with Salesforce and ServiceNow as platform companies. Workday periodically used to it would just blow up. I mean, meaning sometimes it failed to deliver the big upside surprise the bulls were hoping for. But that seems to have become a thing of the past. Oh, Workday's just become masterful. Now, we got a remarkable guidance hike from Royal Caribbean this week. So the question is, can Norwegian Cruise Lines follow when it reports on Tuesday? I don't think it'll be as good. But you know what? It still might be worth a trade if you come in on Monday. Now, how about Lowe's? Interesting dynamic here. Home Depot reported this weekend. It was widely panned at the time, but then buyers came right back to it, as I knew they would. That's kind of like McDonald's. These two companies, they don't trade necessarily together, but, you know, they get hit, then they come right back. I mean, the Despot did say how do-it-yourself remodelers were pretty active, which is fantastic news for Lowe's, because that's more DIY. Buyers have taken the stock up with a few bucks as 52-week high in response, but you know what? I think they can take out that ceiling We also get results from Macy's, and we need to hear what they're going to do to fend off this activist firm called ArcHouse, which wants board representation. They just bumped their dividend 5%, but I don't think that's going to do it. The numbers will have to do the talking. Then there's the one solar panel company that's actually making money, and that's First Solar. I like this one, even after Solar Edge blew up this week, because First Solar has been focused more on the commercial side of the industry rather than the residential side, which is much more reliant on financing. This is looking good here for a trade. Now, one of the most unfortunate aspects of earnings season is that companies have their own styles. Not everybody gets them. TJX is one of these. It tends to be non-promotional with headline numbers that don't tell the full story. Yet people trade it like it's crazy off the initial news coverage. Please, please listen before you act on this one. TJX often gives you great buying opportunities because the stock regularly gets hit on good results after surging at the beginning. If you don't own it already, don't buy it. Just wait for a better entry point because what's going to happen Wednesday morning is too crazy. I'll be there for you at 9, but already it'll probably be too late. Also, after the close, two of my favorite companies report: longtime charitable trust holding Salesforce and the terrific Snowflake, which I'd be happy to own for the trust if we only didn't have so many tech stocks already. Now, there have been 3 successive positive analyst reports out this week about Salesforce, and if I were at my old hedge fund, which I'm certainly not, that was 24 years ago, these big pieces of research that were so bullish, they would make me nervous because the stock might come in too hot. But even if it disappoints, I bet the stock will be met with buyers by Friday if it sells off Wednesday. And so I'm not sweating the program. How about this Snowflake? Very expensive, less seasoned, but CEO Frank Slootman has created a company that allows you to rent the cloud and find out if you need all that high-powered, expensive AI stuff. It's a fantastic value proposition. I'm expecting a good quarter from Frank Slootman and Snowflake. The Fed cares a great deal about a number that comes out Thursday. It's called the Personal Consumption Expenditure Price Index. I think this inflation reading will sow confusion because it'll be on the hot side. I've been adamant the economy is generating way too much heat to see any meaningful price declines, which will delay any rate cuts until, who knows, the fall. I don't know anyone else on TV who's as negative as I am about potential rate cuts, but I think PCE will vindicate my vision. Earnings, Best Buy reports Thursday morning. Need to accept that this quarter may not be that good, but if you listen to NVIDIA's Jensen Huang earlier this week, you know we got a new PC cycle coming and people go to Best Buy to get those AI-enabled machines. I'm looking for the right time to buy this one, maybe after this quarter. Next, we hear from one of the most consistent cybersecurity operators in a group that's been jarred by disappointment. I'm talking about Zscaler, which is all about identity management. They've been pleasing the street for ages. I think they're going to do it again. Maybe buy some calls deep in the money. I rarely recommend that strategy, but I think it'll probably work for them. Finally, late last year, I was adamant that you must buy GE Healthcare, the gigantic then underperforming stock, because I heard that RadNet, a company that administers MRIs, was a size buyer of GEHC machines. We own GE Healthcare for the Chapel Trust. And since that RadNet appears, it's tacked on $20. I'll talk about it tomorrow's annual club meeting. To be good in this business, you need to listen to everyone and everything. If you only have a certain amount of time, you have to pick your spots. For shareholders of GE Healthcare, RadNet was a real good spot. Let's see what they say on Friday. Bottom line, I don't know if the rosy you from NVIDIA has staying power for next week. Long weekend. But there are plenty of good companies here that can carry a torch for the averages. Let's go to Trey in Texas. Trey.
Jim, my father-in-law thinks all cryptocurrency is complete nonsense. Last night, he went so far as to tell me Bitcoin's current price is indicative of wildly speculative fervor, whatever that means. Personally, I think Bitcoin's going to $100,000 and I'm buying more. My question is, will Coinbase continue to rise as we march towards $100K?
Trey, if Bitcoin goes in your strategy, the way that you think it is, yes, absolutely. I'm neither for nor against. I think that people who want to own Bitcoin should own Bitcoin. Look, I'm not going to make a judgment. It's made a lot of money for people. Jason in Florida. Jason.
Hey, Jim, from the Villages, Florida. How are you? Thanks for taking my call.
I am good. How about you?
I'm doing great. Listen, my wife and I have built a position in Netflix. We've ridden it down and now back up. Considering the consolidation in streaming, do you consider this a buy, sell, or a hold?
I like Netflix very much. When I buy it right here, it's just had a very big run. Let's just wait for a pullback. This market is going to give us more pullbacks. We've been straight up. At this point, I'll wait for a pullback, or I just won't get it at all. Let's go to David in Kansas. David.
Jim, thank you for taking my call. Calling from the home of the Super Bowl champions, Kansas City Chiefs.
Yeah, I love the Chiefs. Love the Chiefs.
Hey, second-time caller, long-time club member. Good luck to you and the team on the annual meeting tomorrow. Thank you for all that you do. Hey, questions on Coterra. I want to start a position, club name. Do I scale in next week? Wait for a pullback?
Just buy. I got to tell you, when I listen to what Tom Jordan was saying about how he's diversifying, he's going right back to oil where the action is. He has that model. That model works. The stock should have been over to 27. It's at 26. Low. Very inexpensive stock. I would pull the trigger Monday. At some point, we have to take off our NVIDIA-colored glasses. I think there are some opportunities that we can carry the torch for the averages next week. I'm ready to help you find them. I mean, buddy, could Exxon be the way to play this tape for those who think that the averages have gotten ahead of themselves? I'm digging down deep in the story. Then, after a powerful week on Wall Street with the bulls continuing the run, should investors maybe keep the faith on, or could there some near-term turbulence be lurking? I'm going to go off the charts to find out. Then Tanger's continuing its U.S. expansion with a 39th location. I'm learning about the strength of retail and this terrific REIT that I've been behind now for probably close to 100%. Stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.